And joining me now with further analysis on the bank's performance is banking analyst at Ashburton Investments, Daniel Masvosvere. Thank you so much for your time, Daniel. It was very interesting to see the investor reaction after Capitec posted those results. Judging from that reaction, would you say that Capitec exceeded market expectations and that it was all hits and no misses?
No, for sure. Listen, it was a very solid result. So the market expectations question is always very interesting, but I think you can sort of see from the share price reaction post the result that certainly the market was pleasantly surprised. So I think they delivered slightly ahead of consensus expectations on earnings. But like I say again, the market expectations question is that there's so many people in the market with different expectations.
Yeah.
But the bottom line is it was a solid result, and the market reacted positively to that.
Indeed. Of course, they also mentioned their diversification effort, right? And I just actually want to go in there because, I mean, there's always been the big four. And then Capitec, looking at, its focus on retail banking. But now it seems that they've worked their way, for growth, outside of retail banking as well. And I'm wondering at this point, has Capitec reached its next growth phase? And can you maybe say that its maturity now levels it on the same plane as the other big four banks?
Yeah, look, I mean, I think the breadth of the banking offering at the, call it big four, is still broader than what you have at Capitec. So if you think about the big four, that's Nedbank, Standard Bank, FirstRand, Absa, they would all have a significant investment bank as an example.
Yeah.
Right? Capitec is not exactly in that space. But within retail banking, they've certainly broadened the product offering. To include new products, even on the secured lending side. And so, yeah, I mean, I think they're competing, and it's fair to say you do have a big five now in SA banking.
All right. And of course, talking about the big five, one thing that they have all struggled with is the pressure on credit. Just looking at what you saw in terms of the credit impairments, particularly looking at Capitec, that it's got the most exposure to, clients that are most vulnerable to the headwinds that we have seen in the macroeconomic environment. Where would you say clients are versus expectations?
Yeah, so I think Capitec has seen credit pressures like the other banks, so credit losses across the sector have been quite elevated. But I think the story coming out of this result is really the growth in non-interest revenue, up 26%, right? So if you look at the net interest income, net of impairments, that went backwards about 2%. But that's more than made up for by the growth in excess of 20% in non-interest revenue. Non-interest revenue now is greater than 100% of your operating expenses in the business.
Yeah.
And what that does is effectively all your NII essentially falls through to the bottom line, plus some of that, call it non-interest revenue that you retain coming out of what are these new growth vectors in the bank. So if you think insurance, if you think value-added services within strategic initiatives, all showing pretty solid growth.
Yeah, and it's really quite interesting that you talk about that, in non-interest revenue that has grown so much, because it hasn't been the same story throughout all the banks. For example, Absa actually posted quite subdued growth numbers on that front.
Yeah.
Let's go back to the diversification effort, to the point where Capitec has gone international with that controlling stake in Everfin, the online lending company. Is geographical diversification needed here? And do you think that they've got more runway in terms of expanding geographically?
Yeah. So the way I think of that, call it acquisition, is it's really a real option, right, that the group has on growth ex SA. But to be honest, I don't know if that option is in the money right now and if they're going to be exercising that option just yet. But it's good that they have the option. I think there's enough growth runway within the local market across the three new vectors, business banking. We spoke about strategic initiatives. We spoke about insurance. Yeah. Right. I think there's enough runway. And then in the retail bank, I think there's still scope and opportunity for them to broaden the product offering to compete more directly with some of the incumbents. So I think there's enough growth in the local market. But in time, they may very well exercise that option, and it's a good option to have.
Yeah.
But yeah.
Well, it's quite interesting that you talk about, that there's still enough growth to expect in the local market, because you're seeing all different kinds of players banking on that growth and talking about that Old Mutual now as, it increases its effort to establish a bank. And quite interestingly, that the kind of client base that they're going for is similar to Capitec's target market. Is there a danger here for Capitec, considering, what Old Mutual wants to offer and who they're going for, and considering also, the host of services that Old Mutual already has on offer?
Yeah, look, I think the decision to create Old Mutual Bank is driven in part by necessity, and a lot of the focus, I think, will be on the funding cost for their credit offering within Old Mutual.
Yeah.
And they're really focused on their existing customer base and not looking really to growth beyond that. They will compete with Capitec. They'll compete with everybody else. But I think Capitec is, pretty much a lead in terms of sort of first mover in that space. So I think, there's going to be competition, but I think Capitec's got a pretty good hand.
All right. Well, thank you so much for your time, Daniel, and for your insights on those results that we saw coming out of Capitec this morning. That was Daniel Masvosvere from Ashburton Investments.